Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping, 4% credit card fees, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
Hey everyone, this is Elijah Johnson with FinanceandLiberty.com, and back with us today is Rob Kirby from KirbyAnalytics.com. Rob, thank you so much for joining us today.
My pleasure, Elijah.
All right, well, I'd first like to discuss about the precious metal markets. Since the beginning of the year, gold is up about $150 per ounce, and silver is up about $1.50 per ounce. So why do you think that gold and silver are making these kinds of moves since the beginning of the year?
Well, Elijah, I think it's all tied up in the reality that stores of physical metal, which are used to justify the fraudulent paper games, need to be expelled from time to time, and officialdom have run their stocks of physical metal down to the point where the cupboards are pretty close to bare. And when the cupboards are bare and they no longer have physical metal to justify their fraudulent paper price setting, I expect and believe that at that point in time, the price of both gold and silver will rise dramatically and in a very short period of time. And just to elaborate on that theme, I'd like to share with you a little story, and it's a true story. And so years ago, if you want to think 2004, when the price of gold was struggling to find its footing above $400 US an ounce, I was playing a round of golf with my brother at a suburban Toronto golf course. We were playing as a twosome, so the starter had a single, an elderly Swiss gentleman, join us for the round. The first couple of holes, there was typical small talk, and we learned that our playing partner was a retired chairman of a Swiss banking institution in Toronto. By the sixth hole, our banter turned to the markets, where our third player pointedly asked my brother where he would advise one put his money. With my brother and I already being committed hardcore gold bugs, my brother emphatically stated that gold, in his opinion, was the go-to asset going forward, and listed the usual host of reasons why. After taking all of this in, our Swiss playing partner's reply was the following, and if I don't have it verbatim, this is the message that was being conveyed. I wonder if you had any idea whatsoever just how much hatred the ruling establishment has for gold, and the great lengths that the establishment has already taken and continues to undertake to discredit gold. I wonder if you knew all this, if you would still be so bullish on gold. Well, I'll tell you, Elijah, my brother and I stared at each other, giggling and nodding, reiterating in sync with each other. That's exactly why we think gold's forward prospects are so excellent. The price we see is artificial. It's determined by futures. Physical demand will eventually trump paper promise prices because you cannot print physical gold. So, you know what the upshot of that is? I think back about this quite often, and because I wonder who is really correct, and the answer is I think both parties were correct. He was correct in that the price of gold is absolutely manipulated and rigged. It was then, and it still is today, and we were right in another sense because, what my brother said back to him was accurate in another sense because. The price is 3 times, what it was then. And the guys doing the suppressing have less metal in their cupboard to continue the suppression than they did then. So we both sort of hit it right on the, right on the beak, so to speak. And, the prospects going forward as the cupboard gets closer to having nothing in it, I would suggest that prices have to go higher. And frankly, I think that the price movements up that we've seen early this year are only in response to record offtake by the likes of Russia, the likes of China, the likes of India, and the growing offtake that's occurring in the retail end of the business in terms of small coins and bars, as evidenced by record sales by the likes of the U.S. Mint, the Canadian Mint, the Perth Mint, and any other mint that manufactures and produces high-grade bullion coins. So that's where I think we are, and I think that's the reason why prices are moving up. And I think we're going to see a lot more of it in the near future.
Now, in your work with precious metal dealers, what have you experienced recently with respect to demand for physical gold and silver? How has that been affected since the beginning of the year with this increase of the precious metal prices?
Well, the demand for and availability of precious metal varies from jurisdiction to jurisdiction. It always has, and will probably continue to see that on a go-forward basis. The availability, let's put it this way: most of the macro demand for precious metal comes from the East, and in the East, it's usually and quite typically it's very difficult to source decent stocks of physical metal. In the West, on the other hand, where the establishment takes every opportunity they can to diss metal and to diss gold bugs and to diss people who believe in sound money, the Keynesian-minded people, there tends to be more availability, generally speaking, than there is in the East. So the market's it's gonna say it's fragmented, and I'd even go as far to say it's bifurcated, because there's also a huge physical bullion trade in raw bullion that's conducted out of Africa, and a lot of that metal that comes out of Africa is not even documented by the likes of the World Gold Council, and thus does not ever even really make it into official statistical reporting in terms of what the real supply is. In summary, the state of the physical bullion market is that it's tight, and it's getting tighter.
Now, I was recently reading on silverdoctors.com that these price moves that we've seen in precious metals recently, generally speaking, we've seen when we see precious metals move up, then afterwards they consolidate or trade sideways for a little while, and that's traditionally seen as bullish behavior. So,
well, no, but listen. What we're really witnessing, Elijah, every time there's a run up in price, we see a swelling of the open interest, which basically means that all price rises are met with capping action, where paper promises of metal. That metal that doesn't even exist. Like, on a day on COMEX, when we see the open interest rise by an amount that represents, 3/4 of the amount of gold that's produced by the Earth's crust in a year, we know that that's not real gold backing the sales of paper, because the gold doesn't exist. And that's why we've seen, Elijah, over the past 6 years, we've seen that the coverage ratio of physical metal that COMEX has for every ounce of gold that they sell in paper form. Back in 2010, Jeffrey Christian so famously said in front of a CFTC commission hearing in Washington, he said that a coverage ratio of 100 to 1 was the way of the day, and it was completely fine. Well, today in 2016, the latest numbers I saw from COMEX is that they have sales of like 550 ounces now for every ounce they have in their inventory. So you see, it's not really magic, and it's not really like gold goes up and trades sideways because of some mythical thing. Gold naturally wants to rise because central bankers are not have not been acting as good stewards of our monetary affairs, and they're getting failing report cards, and that's why the price of gold wants to rise. And every time it rises, they seem to think it's prudent to sell more paper contracts or paper promises of the same, and this is what's used to cap the rises in price. But you see, it doesn't mean that the metal exists, and ultimately, what it's highly suggestive of is that somewhere down the road, there's going to be a huge failure to deliver physical when someone demands it, and force majeure will be declared, and then it's going to be a real Donnybrook, because then people who think they have exposure to the real metal through this fraudulent conveyance of these paper determined prices, there's going to be a rush for any physical that remains in the system, and at that point, I would suggest to you the U.S. dollar will be in severe trouble. And it's very likely that the U.S. dollar will collapse, because everybody will realize that everything connected to and associated with fiat money is a complete and utter fraud, and can't be delivered on. And that's when I do believe, as I've said before, and I will continue to say it, I do think I will live to see a day when you cannot purchase an ounce of gold for fiat U.S. dollars. Period. That day is coming, but you know what? I'll be absolutely, darned if I can tell you what day. I just know it's coming, and I believe I will live to see it.
So, as for the other precious metals, do you see a similar thing happening? So, other precious metals such as platinum and palladium, do you see a similar thing happening to them?
Not necessarily. And the reason for that is that palladium and platinum have historically not been monetary metals. And for that reason, I can see them lagging. And all that being said, I'm not saying I dislike either of them. I just don't see them being a significant contributor or participant in a reset. And ultimately, I think we're going to have a reset, because what I do believe we're all witnessing and watching in real time is the failure of fiat money. And that's the really big story. Fiat money is failing, but fiat money by its very design does fail. Fiat money has a life cycle. Fiat money has, just like human beings, infant, adolescence, adulthood, old age, death. Fiat money by its very design does the same thing. And the U.S. dollar will do the same thing. It's not a question of if it does it, it will do it, and we're watching it because it's an extreme old age right now, and we will see it fail.
Now, how do negative interest rates play in with this? Because there's been a lot of talk recently about negative interest rates, and although they haven't been implemented yet in the United States, central banks around the world, such as in Japan and around Europe, have implemented some sort of negative interest rates. What is your perspective on this?
Well, my perspective on it, to begin with, let's call it what it really is, because to say it's truly negative interest rates is a bit of a misnomer, because it's only negative interest rates for depositors. Okay, you are never going to be able to run your credit card balance at negative interest rates, nor will I. You will never be able to borrow money to buy a house at a negative interest rate, nor will I. So what it is, it's another example of brazen overreach by central bankers who have increasingly painted themselves into a corner with a dying dinosaur entity called fiat money. And these guys are literally trying to dream up any piece of hocus pocus they possibly can to prolong, the amount of time that they get to act like God, where they create money out of thin air. So that's what we're witnessing. This is not a dog that hunts. This is not something that's going to solve any problem. It's going to exacerbate existing problems, and if this line of action is pursued long enough, it will create civil disorder. It's going to create a further fracturing of the classes, and it only brings more bad. So that's my thought on that. And you see, this is what occurs when you have sociopaths pursuing bad policy and just won't give up. And that's why my outlook for things going forward tends to be as negative as it is, because I look and I watch people who do know better, and of course should know better and do know better, continue along these ruinous paths. And that's all I can say. They are ruinous paths, and we have difficulties in front of us collectively.
Did you want to expand a little bit on this? I mean, what do you see for the economy in the United States and on a global scale in 2016?
Well, I mean, look, let's just take a look at it. I'm in Canada. You're in the U.S. And look at what our wise leaders have done. For instance, with our power, electrical power, they've basically shuttered in Canada and in the United States. They've basically shuttered the cheapest costs of energy, which is coal fired power and coal generated electricity. I can speak specifically in the province I'm in Ontario, where we used to get the bulk of our electricity from coal, and they've literally shuttered all the coal plants and destroyed them. And at the margin, coal used to produce electricity at around 6.5 cents a unit. And at the margin, that's all been replaced with wind power and wind turbines that produce power at around 70 cents a unit. So our power prices have gone up, at the margin, our costs of electricity have gone up by a factor of 12. And this is why, over the past 10 or 15 years, heavy industry has been leaving the province of Ontario in Canada. And I know that coal plants have been shuttered on a wholesale level in your country as well. And this is why the jobs have all moved to other jurisdictions like China, and why so much heavy industry has moved to Mexico, because these jurisdictions, are conducive to putting people to work and attracting industry. And this is why our middle class has been hollowed out. This is why Ontario in Canada has lost so much of the auto industry, because auto industry is a big consumer of electricity. This is why we've lost so much of our mining activity, because they are also heavy users of electricity. And see, the prospects going forward aren't good, because we've dismantled the infrastructure that's required to attract industry. And so the jobs aren't coming back. It's not a question of throwing the switch and the jobs return. No, we've destroyed the infrastructure. You see, it's sort of like if you can picture it as going down a road, but then sort of planting a forest behind you as you go down the road, and you get to the end of the road and you say, I'm going to go back on the road, and you turn around and you look behind you and there's nothing but a forest. The road's gone. Well, with our electrical infrastructure, our power infrastructure, this is pretty much what we've done. So, the jobs won't be rushing back, not here, nor in your country. They won't be rushing back. And, so the way forward is we have a decimated middle class, hollowed out, and which has done horrific things to the to the tax base in your country and in mine. I would offer, and this means that government finances, at very best, are going to be severely strained going forward. And our immigration policies of late, particularly in your country, but in my country as well, with unbridled immigration in the wake of deteriorating government finances and rising social costs, doesn't bode well for our standard of living, period. So that's what I see going forward. It's a realist view. I don't say these things to try and scare anyone. It's my intention, and it's my always been my rationale that be informed and be aware, and I personally take information or being informed. I find it empowering. And generally speaking, Elijah, the only thing that really scares me is the unknown. So I'd rather know and be aware than be, unaware and not know. So that's my view of that.
Now, some people are seeing that in 2016 we're actually going to go into another recession. Do you see that as a possibility?
I think we're in a recession right now, and we have economic data reporting, which is extremely unreliable. We have inflation data reporting that says the economy is growing, but I mean, if you look at the work of John Williams, and if you look at what he reports is the true inflation rate, and if we're not growing. The economy's rolling over. The economy has been rolling over. The reports of a growing economy for the past 5 or 6 years in America have largely been, false reports. The quality of jobs that have been created, getting rid of one good job and replacing it with two lousy jobs, and there are other people who have reiterated these same words, is not a net positive for the economy, even though it can be spun as an increase of a job. So, one quality job out and two lousy jobs in, statistically gets reported as an achievement and progress, and but the reality is it isn't progress at all. All it's reflective of is a further hollowing out of the middle class. And this is the way data is spun, and the guy who does the greatest work at showing it and demonstrating how fraudulent the data is that government and government sources put out is John Williams. I would recommend everybody go to shadowstats.com and just take a look visually at John Williams, and basically what he does is he takes government data that's produced today, and it's like the unemployment rate. That's another one that's just ridiculous. The way the unemployment rate is calculated today is basically anybody who's not receiving government benefits is considered to be not unemployed. So if you measure the unemployment rate today the same way it was measured back in 1980, which is the last time we had a major recession in the Western world, but if you measured the unemployment rate today the same way it was measured in 1980, I think our unemployment rate would be over 20%. I think around 23%. So this myth that that the economy's strong is a myth. It's a fairy tale, and it's the same thing. It's the same thing with inflation. You can you can move the goalposts. You change the way inflation's measured, and they've done this quite a few times since 1980. And the saying goes pretty much, if you measured inflation today the same way it was measured in 1980, instead of the reported 1.6 or 7% that we're being force fed, the true number is 7 or 8 or 9. Well, 7 or 8 or 9 back in 1980 gave Paul Volcker, then chairman of the Federal Reserve, reason to raise short-term interest rates to 20%. Well, we have interest rates at 0. And we're probably staring at the roughly the same amount of inflation that existed in 1980. And all that being said, with the strength of the U.S. dollar recently, there might have been and most likely was some easing in inflationary pressures in America. But I mean, still, the big issue is the numbers that were reported or that we get fed are not reflective of reality as it was 20 or 30 years ago.
All right. And I guess I know we've covered this many times before, but you talked about how people can go to shadowstats.com for more true economic numbers, but I guess, did you want to maybe give our viewers your opinion on where they can get some good information, and then also like your opinion on how they can protect themselves from what's coming?
Well, the way I would recommend people protect themselves in a financial manner is to make sure that they have at least some of their investable assets in physical precious metal, and view it more possibly as insurance than rather than a speculation. Some storable food is probably good advice, and a means to protect it all probably isn't such a bad idea these days either. And I would also recommend people get to know their neighbors, because there's safety in numbers. All
right. Well, Rob Kirby, thank you so much for joining us today. Before we let you go, did you want to share any last thoughts with our viewers and where they can find you on the internet?
You can find me on the web at KIRBYanalytics.com.
All right, great. Once again, Rob Kirby, thank you so much.
My pleasure being with you.
This video was brought to you by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with Bill Murphy. Is gold finally breaking out of its grinding 4-year decline? Co-founder of the Gold Antitrust Action Committee, Bill Murphy, tenacious crusader against illegal price fixing and renowned expert on precious metal manipulation, returns to ReluctantPreppers.com to weigh at this crucial moment of financial importance. This interview is not to be missed.